So we have quite a ways to go.
What about emerging markets, Louise? What do you see there? Are there better-looking charts?
Yeah, the emerging markets overall have been outperforming the developed markets, and that trend has remained in place. I mean, one could actually ask the question, as we posed in 2006, as to whether we weren't seeing some kind of a hybrid market in the sense that the U.S. is in what we believe is a structural bear market. But it's quite conceivable, given the infrastructure needs and the build-out that's occurring in many of the emerging areas and the populations that are starting to come into middle class and have access to the ability to purchase consumer products, homes, and those things they need to fill those homes, appliances, etc., that the rest of the world and the emerging world could be in a situation similar to what our country experienced in 1942, which is essentially the initiation of the next structural bull market after the 1929 decline and bear market. And that was really propelled by soldiers coming home from the war, which you could say is an influx of a population that needs homes and needs appliances, and contributed to the growth and the infrastructure of the United States. And I think that it's conceivable that we may be in a structural bear market, but the emerging areas of the world could be in the initial stages of their own structural bull market from the perspective of development and of the country and the affluent buildup of the people.
I'll ask you about the dollar in a minute, the U.S. dollar, but what about leadership going forward? Is there something that you see or you can identify anywhere globally? It doesn't really matter, the commodities markets or anywhere across the globe as far as leadership going forward.
Well, I think that we're anticipating that the materials and some of the industrials that are going to participate in the global build-out are going to be among the leaders. But in the short term, in the very short term, as was the case from 1938 to 42, there was such a need for repair in the stocks that were hurt during the bear market that we saw a lack of leadership. In other words, we saw very rotational periods where you moved from capital goods to consumer goods on each of these cyclical bull and bear market reversals. You went from needing the defensive sectors and then coming back to the industrial, etc. And that really took place for a number of years, from 1938 into 42. And we may have a continuation of this rotational experience that we've had throughout this year, I believe, that goes forward, that we are, in fact, without a defined leadership, but that the potential for an eventual move toward whatever the leadership defines itself as. Right now, I would say technology is certainly one of the ones that we have favored, but probably it's due for some kind of a consolidation. But overall, I think you will continue to see this rotational, frustrating as it may be. And believe me, this has been a frustrating period for professionals as well as for individuals.
Louise, let's talk about the U.S. dollar now. I don't want to steal your thunder here, but I know you've been correctly bearish. You've been watching that market. We've broken what is essentially multi-decade support on the dollar. That's obviously extremely significant from a technical perspective. Can you talk about what you see going forward there, please?
Yeah, sure. We got our initial observation of a sell signal in the dollar back in 2002. With targets that would approach the $80 critical multi-year level that you just referred to, which we broke a couple of years ago, and had seen just this very recent rally back during the most recent decline in 2008, 2009, which we think was just a reaction or a rally into the least worst currency during a financial crisis. And now, of course, the dollar has rolled over once again. We are concerned that it is experiencing its demise. I think that if the stimulus idea and the concept of printing money isn't withdrawn or reversed at some point in time, that we're going to have some very serious problems. And I think that one of the things that people have to recognize about the country, as well as about any currency, is that when growth is driven by high levels of business investment, which we have let escape this country and go elsewhere, that growth leads to currency strength. But growth that's driven by strong consumption and government spending, which is what we've seen, the strong consumption that led to the collapse over the past 2 years, and now the government spending that's coming in to replace that leads to currency weakness. And I think that that's a very important observation, that we need to bring manufacturing of one kind or another back to this country. We need to employ our people, and we need to maintain the technological edge that continues to provide the manufacturing base, whether it's electric cars or wind energy or whatever the new technology is. This whole process that we've been experiencing in this bear market is Joseph Schumpeter's creative destruction. And the problem that we have had is that we're trying to maintain dying industry, and this country did not grow great by supporting dying industry. It grew great by putting investment money into new industry and new business investment. And I think that there have been some mistakes along the way, but perhaps we can rectify it.
Louise, that answer, your response, I don't mean to laugh, but it just fascinates me, because here you are, one of the great technicians ever, and you're really not so much a fundamentalist, but, I don't know if you realize it, but you just gave a speech on fundamentals, and I completely agree with you. And it reminds me, Michael Lewitt was on yesterday, who manages over $1 billion, and he was talking about the need to have a productive use of capital, that it's necessary. And when he and I talked prior to the interview, it was this need to really industrialize again and bring back manufacturing. It's the same or similar type thing that you were just saying, and here you are, a technician, and you're mentioning these things in response to a question about the dollar.
Yes, but Eric, it comes from the chart. You see a dollar that's been in decline since 2000, 2002. And it's inevitable that one wants to dig under and understand why we're seeing this in the charts. And, just getting some of a grip on some of these basic understandings of when one has a strong currency and when one doesn't is key to why what we're seeing in the charts is occurring. I mean, handing out money, as the last administration did, and telling everybody to go shopping, I felt was one of the most irresponsible things that anyone could fathom.
Agreed.
Everybody's into debt, up to their necks, and they're given $250 to go shopping. I mean, please.
Let me ask you something, Louise, then, because if I'm hearing you correctly, what you're saying is, look, Eric, the charts are telling me that the dollar's going lower. So I'm trying to look at this and really figure out what is wrong. And you just went through what is wrong, and you said, here's what we need to do to start moving in the right direction. What are your targets, though, on the dollar?
Oh, dear, you don't want to hear them.
Go ahead, please.
Well, we've had our longstanding downside target on the basic trade-weighted dollar has been 60. But there's another measure of the dollar which I actually prefer, and it's the broad trade-weighted dollar, which, Eric, includes all of those countries, emerging nations, that carry surpluses to us. So it's not just the major trading partners, many of which also have declining currencies, but it's all of the currencies with which we trade. And that's a very different profile, because that has broken over the past several years a 22-year uptrend and has broken down from a 6-7-year top. And the rally that we had to the least worst currency very recently took the bounce right up into the broken support, now resistance, and has rolled over once again. And that, to me, tells you that you had this 22-year uptrend where the dollar was strong versus the world. And now we have entered a structural declining trend, which could last, 10, 15, even longer, taking the dollar further down. And I think one has to think back a little bit about history and recognize that in the 19th century, it was Britain that was the economic leader of the world, and the pound was the currency of choice. And that post-World War II was handed over to the United States, which became the economic leader and the currency of choice. And if this trend continues, it's almost inevitable that we are somewhere in the next couple of decades going to be handing that baton over to another country, and we could speculate perhaps China to get their act together, and the yuan becomes the currency of choice. And frankly, the yuan is becoming backed by gold because they are I think, have taken over as the greatest miners of gold, and they're keeping it all. And our biggest mistake was letting go of the gold standard.